All right. Hello, everybody. Hopefully you can hear us and see us. We're going to get started now with our panel webinar today. You can see in the chat box on your right a few questions and comments. Feel free to jump in there with your thoughts as we go through. To start off with, I'm Rachel, VP Marketing here at ChartMogul, and I'm super excited for our panel here today. We're going to be talking about what impactful investor reporting looks like and how to engage your board to get the most input. And this is the first of 3 panels that we're running between now and the end of the year, really designed for folks like you, SaaS founders, CEOs, and leaders, all around topics that I think are really top of mind for us at the moment. In October, we'll be talking about mitigating churn. In December, we'll be talking about strategy development for growth stage startups. But today, we'll be focused on everything around investor reporting, and I am super happy to be joined here by a panel of experts. I think the experience here is very deep, lots of firsthand experience on both sides of the table. So let me do a round of introductions as we get started. So start off with Barb. You can wave there. Barb Gago, who is CEO and founder of career progression platform Pando. Barb raised a $7 million round earlier this year after founding Pando in September 2020, and also brings a wealth of experience from her time as CMO at Miro as well. So then next up, we have investor Keith Wallington. Keith, do you want to give a wave? Keith's currently on the board of, I think it was 5 startups, right? And focuses his investing on both growth stage and also Series A B2B SaaS businesses. And then finally, we have Dave Fitzgerald, FP&A lead from Teamwork, project management platform Teamwork. Dave was part of the journey bootstrapping the company to $30 million in ARR and has since helped raise the $70 million to fuel their growth moving forward. So welcome to the 3 of you. Thanks so much for joining us. I thought maybe, in order to really prove the depth of experience here, we could do some quick math to see how many board meetings, investor meetings we've all been on. So maybe, Barb, quick math. How many of these calls do you think you've been on in the past?
Maybe 50.
50. Okay, cool. Dave, what about you?
I would say closer to 20.
20. Okay. Keith?
It's a bit over 300, I think. But that's because I have a portfolio model, whereas Bob and Dave are in a different game, right? They're in one business trying to achieve things for one business where I'm spread.
You have like 3 a day.
Keith is addicted to it,
Tomorrow.
Well, thanks, Keith, for taking time out of your busy board schedule to be here then. But yeah, I mean, the numbers are pretty big. So I'm pretty confident moving forward, talking a bit more about this. Just for those who are joining us, we're going to jump into the panel discussion, and I've prepared a couple of questions that I want us to walk through and have a bit of a discussion around. But if at any point you want to ask a question, suggest a question, feel free to type it in the chat or to use the question button down there on the right. But to get started, Keith, since you are such an expert, having attended and probably run many of these reporting meetings over the time, what would you say is the sort of North Star of what investor reporting is meant to achieve at the end of the day?
Okay, so yeah, thanks. Good question to start with. I think people probably assume that the primary reason for a board meeting is to allow your investors to understand where their investment is at, to track their investment. And that's not wrong, but that's kind of table stakes. That's the fundamental objective at the base level of what a board meeting and board reporting should all be about. It's about telling people what's going on. But I have the view that I think boards should be high-performing teams, like any other team in an organization, like your executive team, etc. And high-performing teams need high-quality information to understand what's going on, so that they can develop strong strategic and operational outcomes. And so, well, how do you do that? By communicating really clearly in advance in consistent, clean styles, focusing on the key priorities in the business, quant and qual, that set you up to having a really high quality board conversation.
Yeah. Not a small ask then. That sounds pretty
Very doable.
very doable. Let's talk more about it. So I know, Barb, obviously with your recent raising 7 million, you've invited and welcomed some new investors as well onto your board. So how have you folded them into your reporting? How are you running that at Pando today?
Well, I think as Keith said, just consistent and relatively straightforward on the preparing side and reporting on the same stuff every time. Because we're early stage, I think we'll probably talk more about that, but the types of metrics that you need to report on are going to be different for different stages. I do monthly reporting, pretty straightforward. The first actual thing I report on is if I'm default dead or alive, which basically just means based on the money that we have in the bank and our growth rate, money in the bank growth rate and our burn, like, will we make it to profitability before needing to raise money? So we will most likely raise money even if we're default alive, but it's a good measure just for everyone to understand like the general state of the business. And then we're a SaaS B2B product. So we do ARR, we do month over month growth rate. We do number of customers, our annual contract value size, because since we are early, this is also an important indicator as like even within months, we've increased, our ACV by 30%, for example. So this is like us experimenting with pricing, getting bigger deals, whatever, but having that kind of indicator show month over how it's growing and increasing. And then of course, how much cash do we have and how much runway based on burn.
Awesome. Okay, so that's
just
kind
the
of
same every time.
Yeah.
It's a template. I just fill in the numbers. And then as Keith mentioned, with the qualitative, I usually have like key insights, which could be things that we've learned about the market or things that we're learning with customers or prospects.
Yeah. Awesome. I see you got 2 thumbs up from Keith on the consistency point. So then maybe over to you, Dave. I mean, I know you've been doing this for a while as well. How does this work at Teamwork?
Yeah, our stacks are pretty similar. I might give a little bit more context in our business. So typically we're selling, our ICP is kind of services business, is employee size kind of 1 to 250. So we have a reasonably quick sales cycle, typically kind of 20 to 50 days, and that allows us to have a lot of experimentation in our model. So the way we kind of operate with the board is we do month 1 and month 2, we provide kind of a monthly overview of what's happened in the month. This is quite metrics driven, and it just gives the board kind of a consistent update on what's going on, similar to what Barb mentioned. It's always the same kind of 6 or 7 slides in the deck, looking at the same metrics and a small bit of verbal overlay about what's happening. And then for month 3, we do a full quarterly board report, which is more about, we kind of set out like the first stage is CEO update, which kind of where our CEO talks about the strategic objectives for the year and how some of the stuff we've been working in the quarter are impacting that. It's actually quite a slick, it's laid out like a tabular format with a kind of a red, amber, green. So it's kind of easy to digest. And then that kind of gives some more context to the board. We move into the metrics, not too dissimilar to a lot of the ones Barb mentioned, but then some of the ones that are kind of key for us at the moment, especially in line with our strategy, because our model is we have product add-ons, we have product upgrades, we have adding users. So NDR is a big metric we're always looking at, and we're kind of really, I just love the NDR metric anyway, and starting to pick it apart to try and figure out where we have market fit and where we don't, and how our pricing and packaging is coming together to allow us to move people through the plans or move them towards the add-on. So that generally draws a lot of conversation in that section. And then after that, at the quarterly, we typically do a deep dive on, it's not always on a function. It might be on something we're planning on doing that we're seeking counsel from our board. So maybe it's one of our big efforts at the moment is to get more kind of boots on the ground and closer to our customers in America. So building out that plan and strategy and getting guidance there. And we typically kind of finish out with just kind of more what I would call housekeeping. So it could be like signing off on share stuff or any of that kind of good stuff that happens.
Yeah. Awesome. Okay, so then again, like quite a repeatable template that you're following with like slight focus shifts depending on what's top of mind. Yeah.
Yes, definitely.
Yeah. Interesting. So one question I'm always wondering about is, you've both kind of alluded to it already, some of the key metrics or I guess focus areas which your boards, that your investors tend to kind of hone into as part of these discussions. I've been to a couple of board meetings myself. I won't say the number because it's a lot less than everyone else. But with the ones I have been into, there tends to be a lot of engagement around sort of one or two topic areas, depending obviously on the context of the business. And so it would be interesting to hear from each of you on what are the key areas or metrics where you tend to get the most engagement at the moment, depending on the phase, the growth phase that your company is in at the moment. Maybe Barb, do you want to get us started with that?
Sure. I was just thinking back to like greenhouse board meetings and then Miro, and then obviously where I'm at with Pando is totally different context. But I remember with greenhouse, probably like around Series B-ish, maybe between 3 and 10 million, like somewhere around there. I would say we spent a lot of time on like marketing specific metrics in terms of lead sources and conversion rates. And it seems tactical, but it was really because we wanted to make sure, and the board obviously wanted to make sure, and this was a really big topic around the predictability. Like if we say we're going to scale the business to X over the next 6 months or a year, how? Because it's not just like, usually if you just throw salespeople at the problem, that you start getting diminishing returns at some point, and you may end up with a really big sales team that isn't hitting their goals. And so it's really important that you know where the leads are coming from and you have predictability around the quality of leads. So that would be one of the areas that we spent a lot of time on there. That was a traditional sort of B2B funnel process or sale, marketing led for the most part at that stage. With Miro, because it was self-serve and then product led into enterprise, a lot more of the conversation was around like product qualified accounts. So understanding the types of accounts that were in the self-serve product that were either paying or not paying, and what did those accounts look like in terms of, did we have multiple accounts at one company, and how all that sort of flowed. And then I would say also very top of funnel, like traffic, and how conversion rates on the website were in terms of getting net new top of funnel free users in the platform.
Mm-hmm, mm-hmm. And how does that contrast to sort of the I guess key engagement points at Pando today when you're speaking with the board?
I mean, I think we're just so early that like most of our leads for like, it's still very much word of mouth driven. It's all kind of inbound, but it's definitely not like predictable yet. So I think where we spend more time is around the types of deals that we're closing and the profile of those companies and the trends that we're seeing and why they're buying and stuff like that. So it's a much different kind of discussion now, whereas the other types are more like scaling and operationalizing and making sure that we're like have the right levers and can we like put more money at something to like grow it, versus we're still kind of discovering the pieces that we're then going to try to scale soon.
Gotcha. Yeah, you're kind of in that product market fit journey, almost figuring out which are going to be the types of customers that you're going out more repeatedly after.
I feel like we're relatively good there, maybe just a little bit past that. So now it's going to be like, okay, how are we going to like repeatedly try to find these companies? Where are we going to get them? And what is that sales process going to look like?
Yeah. Interesting. Dave, teamwork is sort of, I guess, at the scaling rapid expansion phase. Would that be about right?
Yeah, so a lot of what Barb mentioned there regards my role would have resonated for us and where we are now. So we're very much focused on kind of product activation, product qualified leads, when's the right time to introduce the sales motion. And as we build out our sales motion, we're starting to look at, you know, how effective and efficient is that? So some of the key metrics around, you know, attainment to quota and stuff like that, and how are they starting to layer up to our overall sales and marketing efficiency metrics. So what's the influence they're having on LTV CAC? Like we can see that they're definitely having a big influence on the LTV. I think Barb mentioned that earlier. They're having our LTV, our ARPA or ARPU growth isn't as quick as theirs is right now in terms of 30%, but we're seeing a big influence there coming from the sales team. So we're trying to kind of manage the metrics that show us the balance of investing in that and growing that out. And they definitely get a lot of attention at every board meeting right now.
Yeah, this was something that we talked a lot about at Miro too, because in the beginning, it's kind of like, okay, well, we definitely have leads in that can be sold as enterprise deals that are already in the user base, but is that cannibalizing the business? Like, do we need to spend the money? And the answer was, for at least us, it was yes, spend the money because we grew like crazy. But it's really, yeah, that's kind of a tricky dynamic in the beginning.
And I think one of the things I'm discovering is it kind of comes back to layering. So you at the start, you have a lot of these leads in your database and they're active customers, but you have to keep generating them, and the tactics that you used before to generate them and grow them in there, that they don't necessarily still work. Or you start to, like, we've had 10 years of these leads building up there organically. So there a lot of time has gone by where we have a lot of a base to start working on, and how do we keep layering and growing onto that over time and do so efficiently.
Yeah.
So Keith, then, you know, from your purview, sort of seeing companies at all different stages of growth, how can founders sort of figure out and prioritize, I guess, which of these metrics or which of these KPIs are the ones to really focus on in the board meeting? I think we've heard a couple of different ones popping up at different stage, but obviously there's a lot of things you can look at. So how can we figure that out?
There is a lot you can look at, and I love metrics. But the trick is to focus. And I think, as you've heard, I mean, you know, Bob, talking through the journey of those three businesses, you heard, and including teamwork, Dave, you hear how different businesses are focused on fundamentally different things at a given time. So I think it's about really understanding what the business should be optimizing for now. You know, what are the questions we're trying to solve now, and then build out the right quant metrics to track those things and to stimulate debate, not just in the board, but to stimulate debate across the executive team, who I think should be in the board meeting as well, or at least large chunks of them. But if I'll offer another thought, which doesn't for a second supersede what you've heard already, because what you heard was be very aware of what you're optimizing for and try and focus in on those things, on top of a pretty generic underlying board pack of standard consistent reporting. So I'll throw out a piece of standard consistent reporting, and it's not one metric. It's a combination of three, and we've all heard them before, and they are growth, call it year on year or month on month, depending on the axes you want to use, or the time frame. But typically, it's going to be month on month. It's going to be gross revenue retention, net revenue retention, or some of you might know that one as NDR, net dollar retention. When you view those three metrics on the same axis, so imagine a stacked bar for each month, and in that bar you've got a reflection of new, expansion, contraction, and churn. You're actually looking at a view of the entire customer journey in your organization on one page. Now that might sound almost like too complex that you need to break it down, and you do need to break it down, but it does stimulate really good conversation in a board, and it gets people in various ways thinking about the whole customer journey, and hence the whole business. You know, how are we driving new business? How are we retaining it? How are we upselling it? How are we, you know, what's happening with churn? Let's break out and talk about that churn. But also, you know, if you're really early, if you're, you know, maybe still moving towards a problem solution fit stage, maybe you've got a couple of 100,000 in R, or maybe $1 million in R, and you're coming up towards the Series A, to use the VC parlance. You're not going to have piles of data here, you know, so be cautious about being led to report on a pile of data like you've been in the game for 10 years. So really think about what you're optimizing for. And then also I propose using this thing that I think Dave Skoke was the first person to call it the R tracker, but it's really that sense of tracking all of those pieces in a stacked bar on one axis.
Yeah, absolutely. Not to do a pitch, but obviously ChartMogul is one of the products that I think puts that front and center, with looking at your MRR growth from new business versus expansion, overlapping contraction on top of that. And so, yeah, anyone here on the call looking for a faster way to get that graph done, hit us up later on. I'll keep moving though, however. So I am interested, Keith, when you're looking at that kind of reporting, how does the board and how can you sort of tell whether a company's on track or not? How do you kind of look at progress, I guess?
Yeah, so I suppose I've covered it in the previous one a bit, but it's about what you're optimizing for. So if you think about what Bob was saying about the experience at Greenhouse and what the focus was, the experience at Miro and what the focus was, and now Pando, and also teamwork. Success means the answer to success is what's the experiment we're running and what signals are we getting back? And it's really as simple as that. And just to add a little bit more there, unfortunately, from time to time, you see, obviously, from time to time, you see great investors investing in the right businesses at the right stage for their expertise. Sometimes you see a mismatch. Sometimes you'll see, for example, later stage business, and we saw a lot of this last year and very early this year before the wheels came off. You see later stage investors that get very excited by a very early stage business for them, and they write a great big check on an awesome valuation. But now you've got an investor on the board that might actually not understand the stage that you're at and what you should be optimizing for. And there's nothing more devastating than watching a, seed stage or A stage business being almost forced by its new investor to report like it's 5 years older. And so I'm just going to say it again, be very clear on what you're optimizing for, get consensus with your board. What are the key questions we're trying to answer? In other words, what are we optimizing for? And then agree what the lead and lag kind of metrics are around those things, and don't let them push you later stage than you really are.
Yeah, I love that. It also shows, I think, Keith, you're sort of known as a partner to the CEO when you're operating on the board, right? So a good example of how you can work together with your board, with your investors to figure out, what are we really going to be talking about here? Yeah.
And great investors inform that conversation, really effectively.
Yeah. So what about the sort of reporting that happens outside of cycle? Obviously, until now, we've been primarily talking about when we actually get everyone into a room, be that physical or virtual, and run a proper board meeting. But what about the reporting that happens outside of that cycle? Barb, Dave, how do you keep investors and other folks up to date with progress and what's going on in the company? Is that quarterly heartbeat, or are there other ways that you're doing that?
I do. I have a email list already, and I just send monthly updates. I also send updates in WhatsApp or other by text. Just some quick stats if someone's asking. But yeah, usually I just have a simple email that's structured the same way that goes out every month.
Awesome.
Yeah, we have something very similar. Obviously, we're sending out our monthly update, and then if there is always kind of ad hoc questions that come in, or it's not super formal that don't reach out to us during this period or whatever. So it's quite fluid and it works quite well for us. We haven't had to change it.
I really love texting with investors, to be honest. It's like just easy and fast. So
builds rapport.
What is it?
It builds rapport and it makes it feel a little less formal. It's like a real relationship.
Micro touch points in between.
Yeah. Cool. So then what about the feedback that comes back from the board? So Dave, you mentioned some of the questions that pop up from time to time, or maybe even feedback if you're messaging with your investor and they're asking questions or they're making suggestions. How do you bring the output from board, from investors back to your team? Or I guess, do you? And how?
Yeah, so I suppose even before the board meeting, typically what we do is we share almost the entire board deck with the senior leadership team. We use our own tool. We set up a project. That project's ongoing. They can see what's being shared out. And then we typically, if we don't try and change our operating cadence inside the business for what's going on at the board, unless it's something very material. So maybe the following week at the executive leadership team meeting, we'll spend some time to just go through what the high level conversation was, if there was anything that came out of it that people need to be aware of. And then if there's, kind of minor tweaks or, changes to format and stuff, we typically just get them done or just put them out into the teams to make sure it gets fed back into the next cycle. If they're larger items, they'll typically just fall into our typical planning process anyway.
I agree with Keith that executives should be in these conversations more often. I've been a CMO, so I've been in those conversations because I have the data that people want to talk about. But not everybody was participating from the executive team usually. At Miro, most of the team was there, so the conversations were always really productive, and the person that could answer a question was always there. We gave some updates, like when we had general all hands, like whatever the next all hands was, but I would say there it wasn't as feedback loop because the team was a bit bigger, but at Pando, it's very transparent. Like, I think Keith mentioned this on our prep call, but he talked about how it should just be something that you would normally use anyway to align the team, and that's very much the same for us. So it just gets kind of baked into company updates that we're doing or conversations that we're having in our all hands meetings, which we do every 2 weeks.
Yeah. Okay. So it's kind of part of the regular heartbeat of reporting that you're doing across the company, internal and sort of semi-external as well.
Yeah, there wouldn't be anything that we would tell the board. I mean, there might be, but like generally it's like the stuff that we report to the board is what everybody at the company knows and has access to knowing.
Yeah. Yeah. It's an interesting topic, I think, in these days, especially when, it's quite a challenging market out there, right? So I think probably a lot of us are having different types of board meetings and seeing different numbers than perhaps we did a couple of years ago. And so it's interesting thinking about the topic of sort of transparency and how
I feel like it's become more demanded even by like engineers at companies, because you've heard these stories of, oh, the company's doing so well, and then, oh, never mind, we're closing, everybody's fired. It's like, so people want to know the health of the business and how it's operating, and that it's, they want the validation from the metrics that like the leadership is making the right decisions. And if you don't share it, then there's no, accountability or validation. So I think there's definitely more, trends towards sharing. But I think it also opens up a better culture of transparency, but also gives people opportunities to like come up with insights or comments or ideas, even if they're, a junior person or outside of a GTM function or whatever it is.
Yeah.
Yeah, and I think they also, the more context the team has, the more empowered they feel. And also they'll understand the trade-offs the business is making. So if everybody's got access to all the information and, we need to shift, this is hypothetical, from a significant go-to-market investment to a significant product and engineering investment for a period, that doesn't mean anybody's leaving the business, but they'll understand that, oh yeah, because we've actually been looking at that for like the last 6 months in the reporting, and we can see how that's become really important. Our PLG is becoming a larger component of our business. So, and they can understand that context.
Yeah, that's a really good point. I think especially with distributed teams, like you really need to be more transparent just so everyone knows what's going on.
Yeah.
Why decisions are being made and what they're working on.
Yeah, for sure. And I mean, even the topic of then making that more engaging and impactful becomes important once again, right? Because I think, sharing these kind of metrics to someone who maybe honestly might be the first time that they're really seeing these, all these acronyms being dropped. And trying to understand, well, what is LTV and is that good or bad? And should I care if I'm a developer? I think that's a really interesting piece to think about, how you make that engaging and contextual so that they do get some value and some impact from it as well.
Well, and they want to learn often.
Right.
Like people join startups to learn stuff. So like how to build a startup is part of that.
Yeah. maybe that should be a measurement of success, you know, how many startups are spun off.
Yeah.
Yeah.
Cool. Well, one other question I had, and probably more for you, Keith, but I think anyone can chime in on this, is around the asks that we make to our board. So I think, you know, coming from one side of the table, you know, from my side, coming from the company side, I think it can be, you know, maybe not scary is the wrong word, but sort of, you know, you feel like you've already asked for people's time, you're asking for their input. Can you really ask for much more? And so I thought it would be interesting to ask you, Keith, what are the questions or the asks or the demands that you wish people would make on those board meetings? Any ideas?
Yeah. So what I see often is, particularly at the very early stages, is founder CEOs that really don't like their board meetings. They find that they're just reporting to a bunch of people that have written some checks, and they thank them for those checks, but they're not getting much value back. And some of them deeply dislike their board meetings. They find them unnecessarily anxious, anxiety inducing. And I have a really good hit rate, I think, on getting CEOs to a different place in that regard. And I think it comes down to the stuff we've been talking about. Have that debate around what you're optimizing for. Communicate very clearly in advance on all the consistent reporting that we've discussed today. So your board come into a board meeting where they are fully up to speed on where the business is at, based on the metrics that you've all agreed are the metrics you should be tracking, including the key stuff around what you're optimizing for. But that's not all. Before your board meeting, at least a week before your board meeting, really take time to think through what you're optimizing for. Like, what are your key challenges? What are the key topics? Have that discussion with your executive team. Have that discussion with anybody in the organization that's got a view. Maybe even talk to a couple of board members, and then pitch that agenda into your board way in advance of your board meeting, preferably a week before at least, and say, these are the topics we want to cover. Sometimes they're informed by previous board meetings, and we said we'd cover this at that time. But really own the time that you are committing and you're asking people to commit to you. Don't let it just be, oh yeah, it's that monthly, quarterly, whatever board meeting. You can do that async. Just send them the file. It's about spending time synchronously on really important topics. And you know what they are. Just take the time to think it through. Pitch that agenda. Don't have any board pack flip in the meeting. Get all that done before and spend time on the key topics. And they are, what are we optimizing for now and how can you help?
Yeah. Clear. Super clear. Dave, Barb, anything to add to that?
I mean, I think that sounds pretty good.
Well, I suppose one of the big mistakes, I was laughing when Keith said earlier on he loves metrics, because I also love metrics. And I think one of the big mistakes I made early on at Teamwork was, because of tools like ChartMogul, it's actually quite easy to get our hands on all the metrics. And I used to kind of go on these solo runs where I would produce loads of metrics and chuck them all into the board deck, because I thought that was a very good thing to do. And ultimately, kind of what I realized was, like, it didn't lead to a good conversation with the board, because people were coming in without the proper context and it was quite fragmented. And what started to work very well for us over the last couple of months is we now have kind of operationalized our internal reporting. It's more kind of context gathering into, so we split our reporting at the end of the month. We do an acquisition forum and an ARPA forum, or an acquisition forum and it's kind of a retention and expansion forum. And that's both with kind of functional leads and team leads in the functions and stuff. They've been very powerful for kind of both educating our own staff internally on the metrics, but also on the strategy. And they've flushed up a lot of good agenda items for stuff we just can't answer internally, or we're looking for counsel on from our board. And we then feed them into our board agenda in advance. And it means as well, when our executives are going to the meetings, there's way less focus on the actual metrics that are on the pages, but what we're learning about our business and how we can start to kind of move those metrics in a particular way.
Oh, very nice. It's good, actually. It's interesting to hear from you sort of the mistakes made and how you've you've adjusted that these
I
days
have
as well.
loads of them.
Yeah, we probably don't have enough time, but no, I'm just kidding, of course. So another question then on that, it sounds like, Dave, you've kind of fallen into this in the past, but I think for all of you, acting as founders, CEOs, board chair, what's that balance between sort of getting people to prepare the stuff, getting the context together, and then spending too much time on that? Because I think it can end up eating up a lot of time, sort of reporting, thinking, trying to put it together in a way that makes sense. And a lot of you have mentioned templates that you're using, so clearly that's helping. But are there other things that we can do to sort of make sure we're managing the balance between, managing the business and actually, getting shit done, essentially?
Well, I think
focus more on getting shit done.
We're optimizing for
0 additional effort on board reporting. I think we paraphrase what Bob was saying earlier. Like, do not build stuff especially for them, because why should you be reporting differently to them as you are to your organization? And that should save a pile of time.
Yeah, I think we have 3 or 4 slides that don't come from something that's happening internally in the business that we would do if we didn't have a board, and probably even before we had a board. So that does save us a lot of time.
Maybe aligning your board meeting around when you're already doing that in the company too, timing wise. So it's really just reusable.
Yeah, I typically, quite a few of my teams will align the board meeting to be the end of the week when the management team and all that internal communication is happening, or the other way around. But generally, the teams spend a whole lot of time together, communicate with their teams, and that content generation process just feeds into a board pack.
Yeah. Absolutely. Well, I thought maybe I'd turn over and see if there's any topics or questions that Keith, Dave, or Barb that you might want to cover. I know that I feel like we've covered a lot of ground already, but I feel like I've hogged the question mic. So is there something that we should have talked about around the topic of engaging and impactful board reporting that we haven't covered yet?
I have one I'd love to throw out there, particularly Barb and Keith's opinion on just segmentation and like when is the right time and too early versus. I think it's probably something we're considering a lot at the moment. We have a product with a lot of use cases, and it's across a lot of verticals, and we're starting to see, better market fit in some, or better product market fit or go-to-market fit in different areas, and that's starting to bubble up now. So I'd just love to know if there was any opinions on that.
I think, like, as soon as there starts to be trends, it's interesting, mostly from like a go-to-market perspective, like if those tend to be like your most successful customers, or if you're getting those segments and then looking at the value of them, like which ones are delivering the most revenue and does that revenue grow over time, then I would say like the sooner the better. I mean, honestly, we don't have that many customers, but I'm already looking at it because I don't want to put all my eggs in the like typical, we're going to go after tech companies. Like, what are the other maybe more recession-proof markets that we can target? Or, what other interesting things have we found? And we've already seen that. So like the use of the product isn't very different, at least in our case, but the sales cycle and the why of people buying it is different. So it doesn't cost us more to like service them, but it could be more interesting in terms of like the net return in terms of revenue. Sure. For example, we've found we do have a bunch of tech companies, but we also have a lot of agencies and consultancies and even VCs using the platform, which is very interesting and was not expected at all. But they also tend to be less price sensitive than tech companies because they value what we're doing differently. And they're also not buying as many tools, I think, as most tech companies. So it's kind of an interesting dynamic.
Yeah, I would say, just to add to that, really, because I agree with what Bob's saying, beware the sample size, the data set size, because obviously, you might get some crazy stuff being thrown out, and then just regressionally and segmentation on what basis? Yep, sectors could be interesting, but I love digging in there because it's fascinating what you learn about ICP, off the back of sort of regressional analysis. And sometimes it's sector, sometimes it's not, sometimes it's geo, sometimes it's stuff we've not even thought of. And that might well inform go-to-market. Sometimes it informs user experience and user interface design, because, for example, when I was at Mimecast, or for those of you on the other side of the Atlantic, Mimecast, one of our key beachhead markets was legal, actually UK legal tech, not legal tech, sorry, law firms, but it's a sub community that speaks a very different language about how it describes its IT investment, and so if we could have accidentally gone down a rabbit hole of designing our product using the parlance of the legal industry, as opposed to remaining very generic in the UI, very industry non-specific in the UI, but using somewhat more specific language in how we went into legal from a marketing collateral point of view. And so, yeah, so segmentation, I mean, I think once there's enough data, it's fascinating. But I mean, I suppose even when you've got 5 customers, they're going to be go-to-market people saying, I wonder if we should hit them up more or them less. But I'd say as early as possible, notwithstanding the size of your data set. And I think you've got probably more than enough data to get some really strong signals.
Yeah.
There you go. I think based on Keith's reaction, it sounds like something that it will be a very interesting conversation as well.
Is the segmentation you were asking about, like, is it vertical? Is it company size? Like, what's the product?
At the moment, we're really kind of segmenting based on company size and job to be done.
Yeah.
So not just the industry, because of the nature of the product. And then again, how do we feed that? So we've really started it from a kind of an activation and onboarding perspective, started to tailor and customize the product journey there. And then obviously starting to instrument the go-to-market to kind of feed that better in terms of messaging and stuff like that.
Yeah.
It's just, I think the thing with segmentation is it's always tricky. Is it like there's so many different ways to cut the business?
Yeah.
I'm always mindful of it. Is this the right way to start cutting it or not?
I mean, if it's product-led growth, I think the doing it by product activation, by job to be done makes sense to me. I mean, I know that's not what we're really talking about here today, but it makes sense.
No, I appreciate it.
Yeah, we did it. We did that at Miro also, based on the use case, and we also did our marketing and targeting of personas based on jobs to be done too.
Great.
Awesome. Well, with that, I think it's probably about time for us to wrap up the conversation today. I kind of feel like we could just keep going for a couple of hours, but I know that you will probably have places to go, and I think our audience as well is probably looking at their calendars for upcoming calls. I first off wanted to say a massive thank you to Barb, Keith, and Dave for joining us on this discussion today. Super interesting, really useful insights, and definitely things for us to be thinking about. I've already taken some notes as well. I think the 3 things I'm taking away is from Keith, it's know what you're optimizing for and make sure that's really clear with your board so they understand that. From Barb, it's start using WhatsApp a little bit more, I think, for out-of-cycle communication with these folks. It doesn't just happen in the board call. And then from Dave, it's about, maybe at some point sort of putting metrics a little bit to the side or sort of adding the context there and making sure that you're clear on the story that you're telling, and not just adding a bunch of graphs, even though I too love graphs. So with that, let's wrap up for today. As I mentioned, we've got our next live discussion is coming up in October. We're going to be talking about mitigating churn. So that's going to be an interesting one. We've got some really great leaders coming from Legi, from Loom, and also from Vitality.io. So we'll be discussing that again in this forum. We'll be sending out a recording of this, some other content based upon it in the coming week or so. For now, thank you, Keith, Dave, Barb, and everyone else for joining us. Have a great rest of your day.
Thanks.
Bye.
Thank you.
Thank you.